SARS has actually gone around and SARS has also now gone and released their third-party data submissions requirements. So there's a new draft government gazette which was published. Commentary did close last week. And interestingly enough, and this happened literally overnight, because when I went and double-checked my notes yesterday morning, the draft regulation was still there. I went and checked it today and it was gone, which just means it's going to come for publication soon, is the new additions to the list are Section 18A. And our Section 18A certificates, they have confirmed in the draft government gazette that the Section 18A certificate process will be similar to or the equivalent of what we do with our EMP 501s. So in other words, unlike your IT3As or your IT3Cs, which you only do on an annual basis a couple of months after year end, ITA certificates will be twice a year. So in other words, March to August, and then September to Feb. And you will have to do them biannually and then produce a consolidated report. Same thing with the 18A certificates. And the first cycle in which this is going to fall is actually not the 2023 year of assessment. So unlike most of our considerations or a lot of our third-party data reporting, which is going to start for the Feb 2023 year end, essentially for 18A entities, it's going to start for the 2024 year end. Right, but it's in. We just have a bit of breathing room in terms of when we have to apply for it. Trusts, however, do not have that same breathing room. Trusts, we've confirmed the Section IT3Ts are going to have to be put in. They will have to be put in for the Feb 2023 period, and they are due for submission in September 2023. To put it differently, in September 2023, we have to provide a schedule of all the distributions made by a trust, quantifying the type of income, the quantum of the income, any expenses attributable to it, which go back to Feb 2023. Right. So, to my mind, if I'm looking at it from a SARS lens, I can fully agree and understand why they think this is workable and why they think this is necessary. For context, there was an interview done with Mr. Kieswetter, our SARS commissioner, at the beginning of the year, where he went and said that 2015 was the first year of assessment in which they could really quantify the difference between the trust tax return captured and the individual's tax returns that were submitted. And that for that period, so for the 2015 year of assessment, there's a 57 billion, that's with a B, not an M, a 57 billion rand gap between the amounts that were cleared as distributed by trusts versus what was recorded as taxable by beneficiaries. So I really can understand why SARS is twitchy. Is twitchy a good word? For trust distributions, where we're saying the trust is claiming this as a deduction and it needs to be income in the hands of the beneficiaries. Right. Pragmatically, and I'm not going to spend more time than this on it because we've got enough other stuff to discuss, what it means for us is that we need to figure out how we're going to be able to have capacity within our practice, in our practices, be those tax firms, accounting firms, or any combination in between, to go and say, how am I going to actually be able to go and take my Feb 2023 information and be able to generate the submission by September. Right. From a SARS point of view, the way they're looking at it and going and saying, look, trading trusts notwithstanding, they have their own issues, but it means that a general South African trust is going to own possibly a rental property. It's going to own an investment portfolio, and it might earn dividends from a subsidiary company investment. And potentially it might earn interest on loans made to either subsidiary companies or to beneficiaries. And if we look at it from that point of view, SARS's view is, if I've lent money or borrowed money from a or a subsidiary, then either because of Section 7C or because of Section 64E4, in other words, either because of the donations tax or because of the deemed dividend, I'm more than likely going to have quantified the loan already, worked out the interest due, and have submitted my tax liability by the end of March. So if I can quantify my loan accounts, that's one big number taken off my uncertainty for my IT3Ts. 2, for my investment returns, I'm going to get my IT3As and my IT3Cs by May. You should already have gotten monthly status, so it's just a case of now going and reconciling between what you captured from the monthly status versus the certificate. Shouldn't make a big difference. Rental, the expenses would all have been paid monthly. You would have that information by May. The income, if you're the landlord, you sign the contract, you know what the income is. So why are you incapable of figuring out the expense? I'm certainly not trying to say that I necessarily agree with this point of view. I can just say that I can understand where they're coming from with a point of view of saying that really there shouldn't be a reason why we can't, by September, complete the IT3Ts. But it is very much, for one trust, this is fine. For 1,000 trust, it's problematic. How are you going to manage your practice to make sure that you are actually going to be compliant with this criteria? It genuinely is an issue, right? One which is something I hadn't expected, but if I actually think about it for 20 seconds, it makes sense. An additional criteria for third-party data submissions is the electrical engineers who go and submit completion certificates. So in other words, if you are issuing a certificate that an individual taxpayer will be relying on to be able to claim the individual electrical rebate, being that 15,000, I have to go and upload a completion certificate. The exact format will still be clarified, but it will be a completion certificate which would have to be uploaded. Short version, they want to go and check that the person issuing the completion certificate and the person claiming the rebate have aligned costs, have aligned benefits, have aligned completion dates. It's an anti-fraud measure. I was having a conversation with a client of mine earlier today to go and say, unfortunately, we have a huge amount of fraud in South Africa that happens. It's why we can't have nice things. And if we just go and have a look at the SARS incidence of fraud with respect to your medical expenses and the 6-cap B credit, I can fully appreciate why they are nervous about, from a fraud point of view, these compliance certificates. Right. If we take a slightly less cynical point of view, it also is one of those where I can go and say, even if the fraud wasn't a concern, this third-party data reporting actually provides a whole bunch of other benefits other than just the completion certificate. It would allow SARS to go and check, well, how many megawatts of solar power were installed in total? What was the pace at which those installation happens? What was the average cost of the installation? What was the average size of the installation? What was the average taxable income versus the cost of the installation? Can you really see how many different forms of statistically interesting information can be provided just by requiring the upload of the completion certificate, the kilowatts or megawatts installed, and the timing and the cost? So it doesn't necessarily need to be all cynical. It can also be a review process from a SARS point of view to go and say, we suspect that we spent 4 billion rand on taxes in terms of these rebates. Our return on investment was, and I'm generally just pulling numbers out of thin air, I have no estimate for this at all, 14 megawatts worth of power. Okay. That's a good stat for SARS to have. So yes, it does mean that if you are issuing the completion certificate, they're going to have to submit an annual return. Please note, if you are just doing the physical installation, but you aren't doing the actual certification, then you're not going to have to do this process. Who is issuing you with a certificate that you go to your municipality to, that you go to your insurance company to go and say, by the way, I'm compliant, my solar installation isn't going to blow up? Which 99% of the time is going to be an electrical engineer rather than necessarily the person who did the installation. They will often be the same, but they don't have to be. Okay. Link to where you can go and find the draft guide, right? Trust registration. There's been a couple of changes in how you register a new trust. Please go and have a look at that.